Deutsche Bank is in the news because of their 18,000 job cuts. While that is important, what is more important to understand is what happened a decade ago during a financial crisis. Investors are begging the Fed to print more money and reduce interest rates. The question is, why is this needed? Why isn't the market more liquid? What's wrong with the underlying system? You came here for the truth, so let me unveil that for you. Today I have an extremely important video to discuss. You will not find this on the mainstream media. What I'm bringing you today is an entire expose on the subject. First, I want to start by looking at Deutsche Bank and how this all relates into the other banks that you see today in the United States and the exposure they have to the dangerous derivatives. We are talking about the worst of the worst, and of course, they are all piled up on top of each other. I have some extremely relevant data that, although going back 10 years, is actually going on today. I'm going to show you everything you need to know. Stay tuned for a jam-packed episode. Let's begin. Directly from the GAO's website, right here you can see the outline as to what banks got what. If you look around the world, there wasn't $4.5 trillion worth given out by the Federal Reserve. It went way, way beyond that. There was some information that was released showing 1.2 trillion. Then I saw somewhere else it was $2 trillion. These secret loans that were given out. But of course, we had a limited audit of the Federal Reserve that found $16.1 trillion was lent to institutions all around the world. The Federal Reserve did not want to share who was given this money, but of course they actually did find out exactly who. They had to force their way in, and it is truly terrible to see how much money these institutions actually did receive. If you look at it, it's not just American banks. No. It is actually all of these different parts around the world, different places. And one of those is Germany. Deutsche Bank received a whopping $354 billion during this financial crisis timeframe. That means Deutsche Bank, a German company, received a bailout from the Federal Reserve of $354 billion. They're calling it a loan. I'm calling it a bailout. You can call it whatever you want. Now, of course, it wasn't just Deutsche Bank that was a problem. You could see all around the world we had the exact same thing occurring. UBS right under that. You can see other banks around, whether it's BNP, Credit Suisse, and so many other financial institutions that ultimately would have completely failed had they not been given this lifeline by the Fed. Of course, I always ask the question, if these different institutions have their own countries which they are looking at, maybe it is in Germany, for example, why not use your own central bank? Every country has their own central bank, or of course we have the ECB, for instance. They could go to their central banks and ask for the money, or go to the government and get that money somehow. But instead what we had was the Federal Reserve bailing out all of these institutions, Deutsche Bank to the tune of $354 billion. I want you to find me somebody today that is actually outlining this information. Instead, they're talking about absolute nonsense that, in my opinion, is not real and doesn't exist. We are looking at the alternative media today being completely destroyed by nonsense, and unfortunately the data like this doesn't get covered. Well, I know it's unpopular, but I'm still gonna cover it, and that's what I hope you really find informative. And if you do, of course, hit that thumbs up button. I hear this all the time. We're talking about Deutsche Bank, or maybe we're talking about a different country, and there are always the comments that say, I do not care, I don't live in that country. Well, unfortunately, this ignorance will be exposed in the near future. Goldman Sachs top derivatives counterparties notional exposure as of June 2008. Well, of course, we only get that limited supply of information, but at least it shows us, as of that time frame, how exposed these different companies were. Now you're looking at this in many cases. You can see Deutsche Bank, $41 billion. That's for commodities products. So if you look at equities products, you could see $93 billion Deutsche Bank. Go further in the list, you could see currency products, $74 billion, and so on. Okay, so we're seeing all of these different companies, whether it's Bank of America, JP Morgan, and others that are in here, and they are all exposed to each other. I don't think a lot of people understand how it works, but this is in fact the case. case. When you have one of these big institutions, they're always going to be exposed in some way. These derivative products are interwoven throughout the financial system globally. So if you have a problem in one country, you do in fact have a problem in another. There is no possible way that they can do without. That's the simple matter of fact that how this system is built today. If you think, well, we'll just buy our own products or we'll just manufacture here in our country, we're bringing the jobs back and so on, that's not how the financial system works. You need to understand it. Please do yourself a favor and look into the derivatives. I keep on harping on it, and I don't think enough people do understand it. I know that if you're a regular viewer here on the channel, and if you look into this information yourself, obviously you do know. Unfortunately, the vast majority of people, and that includes those who are investing, do not understand this whatsoever. This is a report from the IMF back in 2016, and they showed us the systemic risk among global systemically important banks, and of course Deutsche Bank in the center. They had this back in 2016 suggesting to everybody that this is in fact the worst of the worst bank in terms of risk. I have been talking about this company for a while, and I see the comments all the time saying, well, you know what, I've been watching this for a while and the company's still there. So this is nonsense and this is garbage and I'm going to buy 7 shares of them. Well, you can do what you want, but of course I'm simply highlighting the concerns that are taking place today. Right in the center here, you can see Deutsche Bank, and look around the world. We can see all of the biggest banks are in fact interconnected with this. So no matter where you live around the world, I assure you the failure of Deutsche Bank will impact your country, whether directly or indirectly. At the top, you can see the net contribution to systemic risk, and it basically just shows you here all of these different companies, Deutsche Bank being right here, just to give you an idea of all of the different companies that are going to be affected by the chaos that is unfortunately going to have to happen and it's already really taking place. You could see the failure of Deutsche Bank and how other companies out there are starting to get concerned about it. You don't see that in necessarily the stock prices, but there are others out there who are simply pointing to the reality of the situation, and it cannot be ignored. Okay, GPS, that's enough about Deutsche Bank. What about American banks? We're strong, we're capable, we're able to deal with any problem because the stress test went through and suggested so. Therefore, it's all good. Well, look at this. You can see directly from the OCC's website, you are looking at the amount of derivatives that the top companies have, and JP Morgan themselves, $48 trillion worth. $48 trillion worth total derivatives. Citibank, $48 trillion, and Goldman Sachs, 40 trillion. Okay, just below that, Bank of America has nearly 18 trillion. So what we're talking about here is an astronomical amount of money that is simply impossible to ever fix. It is impossible to ever manage. And of course, the systemic risk that is going to be caused by the failure of these derivatives, whether it comes out of subprime housing, subprime auto, whether we are looking at the corporate bond bubble that's happening today, whether it's going to come from any number of these different, I don't even want to call them assets, but let's call them risky bets. And of course, that today is going to have to unravel. We saw just a little bit, just a fraction of that in 2008, and surely we will have to meet with that again in the future. Look at the amount of money that is simply out there. Now, today, if you look at the biz, they provide us the data as of the end of 2018, and it shows you the global over-the-counter derivatives market in the billions of dollars, showing us today that basically where we are at is $500 billion. This number has come down quite a bit. In my book, I quoted 1.5 quadrillion. So clearly the number has come down. I do not believe the risk has come down because of course you don't need 1.5 quadrillion dollars worth of derivatives to cause a problem. You can have it with much, much less. The world doesn't need that. If you look at what happened back during the financial crisis, as we saw with the subprime mortgages, that was a very small subset of the total amount of derivatives that were actually unwinding. But of course, as soon as one starts to fail, domino effect, and the others, of course, follow. I did a video here a few years ago and I talked about the Fed bailed out Canada, Prime Minister Harper caught lying because they had said there was no bailout of Canadian banks, and that was found out to be untrue. Of course, nothing was done later on, but that's the way it goes. Nothing ever comes out after, okay? So if we come out and just basically say this is the way it is, that's the way it's going to be, the media will not report on anything afterwards. If there's a GDP number that later gets revised down to basically nothing, it doesn't matter as long as the first one that was reported is good. That's it. That's all that matters. Here you can see that it is clearly not a very popular piece of information. I showed you this video a few years ago when the channel was obviously much less popular, and you could see about 4,000 people have seen this. If you type into a search engine, Fed bailed out Canada, this video is one of the first ones that you will find. And yet it only has 4,000 views. Nobody cares about this information, but it's so important, and that is truly an embarrassment. In that video, I showed you this data here, which on Bloomberg's website no longer exists. I had to go into the Wayback Machine. If you don't know what that is, it allows you to search a web page from many years ago. If something has happened, you want to see the changes that have taken place, you can use the Wayback Machine. And this here just shows you all of the breakdown for all of these different companies that got money. I just showed you in that other piece of data, but this was an interactive website that you can go through and see it all. So then you could say how much my bank in my country received during this bailout, whether you're looking for these Canadian banks in that instance, or you live in a different country, you just want to know. Deutsche Bank, of course, is one of the bigger names on this list. Okay, so this is the Fed's secret liquidity lifelines. They're only quoting $1.2 trillion in this case, but it goes way, way beyond that, of course. This just is a very limited selection. It's not part of the whole $16 trillion audit. It has nothing to do with that. This is completely separate. Bloomberg provided that data. Now the page apparently doesn't even exist. Well, I just wanted to show it to you because it is very relevant to what we are finding today. Last but not least, if you want to know what's happening with Deutsche Bank, at least up until the end of last year, to get their report, to find out what they are up to, at least on their business side that they're willing to mention, this is the Deutsche Bank Annual Report 2018 PDF that you can check out. Link will be in the description. I'm going to end the video there. If you found it informative, hit that like button. You are supporting this channel simply by hitting one button. I do appreciate that very much. If you want the financial education you were not taught in school, these two books have it from top to bottom, A to Z. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want the real data, the real news, then you got to watch this video. Don't go anywhere. Click on that and I will see you over there.